Hey guys, what's going on? Welcome to the video. So we have a lot to get to in this one. So first off, we're going to be going over whether the stock market has bottomed or not in my opinion, and what to expect next from the major indexes and stocks that follow them. And then we'll be taking a look at the top 10 plus stocks that I'm watching right now. These are the names that are in the strongest sectors, are showing the most strength in the market, and could be the next market leaders in this next bull cycle if that is what we go into. And there are always timestamps in the description of the video. Alright, so getting into it, first off, we're going to be taking a look at the broad market with the S&P 500 technicals. And for those who are unfamiliar, I'm always looking at the S&P for the overall trend of the market. Chances are if the S&P is downtrending, then the heavy majority of individual stocks will be downtrending as well. Likewise for uptrending, if the S&P is on the way up, then likely the heavy majority of stocks will be on the way up as well. So let's see what we can derive from the technical chart. So this past week it had some nice consolidation around 410 before breaking out once inflation data came in lower than expectations, triggering the next leg higher. Now, one thing that I was personally watching for was a false breakout like we saw back in March, but so far that thesis has been invalidated as it is confirming above that breakout level. It's currently well above the short-term moving averages, though it's still below the 200-day, which is the biggest trend indicator in the market, and it's the pink line on my chart for those who are unfamiliar with that. Something important to note here is that the market is now substantially overextended though. Each time the RSI gets above 70 on the daily chart, that usually signals overbought conditions and pretty much always leads to a big pullback, which is what we should be expecting next, at least some consolidation or a pullback. Now, in my personal opinion, this current rally is going to be capped at the 200-day moving average. The market needs a pullback or a lot of consolidation before moving higher and potentially breaking above that 200-day, which is currently around 431 per share. Now, has the market bottomed? That is the big question. Most likely so, but there is a lot of fundamental issues that we'll talk about more in a second, but we should not be expecting the easy ride back up to highs in my opinion. I think we will see a lot of choppiness and fake outs from here. So this past week, what ignited the rally was the CPI inflation data coming in at 8.5% year over year, which was below the estimate of 8.7%. Now that is a step in the right direction, but we are far from out of the woods. Right now, the market is calling its shot that inflation is going to deteriorate from here, though in my opinion, the biggest risk to the market is if inflation stays around 7 to 8% for 3+ months from here. The Fed wants us to go down close to 2% inflation, and they will likely be less aggressive after this downside beat on CPI. But in my opinion, I do not think we'll see a Fed pivot until it really goes down. A 0.2% beat is a step in the right direction, sure, but it has not gotten us anywhere close where we need to be or the Fed wants us to be. It's very likely that inflation did peak, but if we see inflation in the 8% range for the next few months, the Fed pretty much has zero chance to have a full pivot and the market could get dangerous once again. Is that a risk that the market is no longer discounting? Potentially, but we also have to go with the trend. All that being said though, based on the recent market action, I do think that it is very likely that we have bottomed already. I may say 75-80% chance that we've seen market lows. Though it is very important to stay on your toes and be ready for any scenario to come next. The easiest thing for all traders is to just go with the trend and not fight the trend. Don't try to be the genius that is loading up on shorts or put options on the way back up, betting that inflation is going to stay high, because just know that the market is smarter than all of us, smarter than any trader. Just follow the technicals. If things head up to the downside, which in my opinion would be if the SPY drops back below the 417.5 breakout level, then maybe look to hedge, play shorts, put options, however you hedge yourself or bet on the downside, and anything to protect yourself. But as long as this current trend holds, as it's shown to hold so far, traders should be in the mindset that we're entering a new uptrend and dips are buying opportunities until we're proven otherwise. Most important thing here is to just follow the trend. Though after saying that, because the market is currently overbought where we're at, it is very important to be patient for it to set up for a potential leg higher and not FOMO in here. So if you're feeling a lot of FOMO, be patient and don't force yourself into this massive rally that we just saw, because we will very likely pull back or form a base here before moving higher if this trend does continue, which in my opinion it is likely to, but we do need that base consolidation or pullback before going higher. Alright, so now taking a look at the individual stocks that are at the top of my watch list. I have some specific criteria for these. What I'm looking for, the first thing, is the clear leading stocks in the market in the leading sectors as well. These are individual stocks and sectors that held well during the massive crash we saw in lows, and they are now leading on the way back up. Those shows are the strongest stocks in the market and will likely have a good chance to be leaders in this new uptrend that we may be entering right now. The second thing I'm looking for is base breakout patterns. This could be, for example, cup and handle patterns that are setting up. We can start some massive long-term moves. or large horizontal basing or consolidation patterns, and more like that. A lot of stocks that led the 2020 to 2021 bull market came out of bases like these, such as Tesla, Teladoc, C Limited, Square, and many others. So taking a look now, the number one sector that is currently leading the market is the solar sector, which is tracked with TAN. So it recently broke out of this multi-year falling wedge setup and now moving higher, likely towards the $100 key resistance / psychological level, and looks primed to move higher towards that level. Now we're going to be taking a look at 7 individual stocks that are the strongest names in this solar energy sector. So first up, Enphase, ticker symbol ENPH. This is the clear leader in the leading sector. This one had a blowout earnings report a couple weeks ago, which triggered the move to new all-time highs. And being in the leading stock in the leading sector is one of the best things you can do. But since this one is very overextended, I would love to see a few weeks of basing or pulling back before entering this one, which can set up for a leg higher if it does get that base pattern going. Next up, Solaredge, ticker symbol SEDG. This is another name in the sector that's been setting up very nicely. It's been basing between 200 and 390 per share for over 2 years and looks a lot like Enphase before that one broke out to new all-time highs. Now 370 to 390 is the big key resistance / breakout level to watch, as once this breaks above it, it can lead to a huge leg higher for the stock. Canadian Solar, ticker CSIQ. This one recently gapped up and broke out of the downtrend. It is now testing the 42.5 key level, which can set it on a leg higher, though it likely does need to consolidate next or pull back before potentially making that move that sends it on the next leg higher. Next up, Jinko Solar, ticker symbol JKS. It's another name that's been range bound since the massive move that it had back in 2020, all the way up to $90 per share, and has had some very constructive movement ever since. Watch for this one to potentially move towards highs on a break above the 68 to 76.5 area of resistance. Next up, Shoals Technologies, ticker symbol SHLS, is currently working on a breakout above the 23 to 25.5 level. The setup looks primed if it's able to hold above 23 from here, though some consolidation next would be preferred to cool off the RSI and set up the next leg. Next up, ARRY Technologies, ticker symbol ARRY, is another one that's been hot recently and making a massive move after strong earnings. It broke out above $20 on volume, which was a big historical level for this stock. And like many others, it is overextended, so I prefer to see consolidation base form here before the next leg higher, the $27.5 to $30 resistance range as the next target above. Next up, SunPower, ticker symbol SPWR, is the final solar sector name we're going to take a look at. This is another one that's had an explosive breakout move on volume after bottoming off $15 a share and now breaking higher above 25 resistance. Like many others though, this one likely needs to cool off and consolidate next to give good entries and set up for that next leg higher. Nothing goes up in a straight line, so be patient for entries in these names because there is a lot of overbought conditions, especially in the sector. But once they set up, I personally will be aggressive on those next base breakouts as long as this sector does continue to be the number one leading sector. Alright, so now we're going to take a look at some of the strongest individual stocks from other sectors that are either emerging or about to break out from some massive base patterns. Taking a look first, Argenx, ticker symbol ARGX. Do not know if I pronounced that right, but it has been range bound for over 2 years and set up in a cup and handle pattern looking primed for a breakout next. Watching for a breakout on a defined break above $382 per share to trigger the move up to all-time highs and could set up for a massive move out of this base. Next up, Duolingo, ticker symbol DUOL. This was an IPO in late 2021 and now is setting up nicely in this 10-week consolidation base and is now trying to confirm back above the $106 breakout level. It recently reclaimed above all major moving averages as well and looks ready for potential explosive move higher if it can hold this breakout. I personally entered this trade on Friday and looking for targets above at 113.75, 120, and then 135, those target levels, and then with the stop loss below 102 in case this breakout does fail to the downside. Next is Ollies Outlet, ticker symbol OLLI. This is another name in a cup and handle setup. It looks bullish for a move higher towards the $75 key breakout level with $95 as a potential breakout target above if this pattern does end up playing out. Next up, LI Auto, ticker symbol LI, is a name that's at the very top of my watch list. This one actually bottomed in May and had a 125% move in a month and a half and is currently in the pullback phase and setting up in a bull flag. If you look as well, this one had heavy volume on the way up and light volume on the way down during this pullback phase, which is exactly what you want to see for a strong stock. And take note that LI has earnings on Monday morning. But if they beat and the stock gaps up on volume, this is a buy for me, looking for a move towards new highs if it explodes out of this flagging pattern. But let's say they miss earnings and gap down, that is a scenario where I'd be staying away. We want to be buying strong names that are gapping up in this market and not be buying dips, because as we've seen, those dips can turn into much larger dips if the market does not like those names at that time. Next up, Celsius, ticker symbol CELH, has been setting up in a textbook cup pattern for the past 10 months. Massive volume recently and is also nearing a break to new highs. We would ideally see a larger handle form here and consolidate or pull back for a few weeks before the potential breakout does play out. But once this name breaks above $110 per share, I think we will see a very explosive move up to all-time highs. There's also a gap to fill waiting below down to $89 a share, and which could also make for an attractive pullback entry if it does drop down there as well. Next is Vertex Pharmaceuticals, ticker symbol VRTX. It's been forming a 2-year long cup and handle pattern. The handle is pretty choppy, but it's still a very constructive pattern for more upside. Watching this one to move above 306 and trigger the all-time highs breakout move. And finally, Shockwave Medical, ticker symbol SWAV. This is proving itself as another one of the leaders in growth stocks. This one is way overextended though, so it'll take a while for this to set up for an ideal entry, but traders definitely need to take note of the strength and volume on this recent move. A substantial pullback or multiple weeks of consolidation would make this one finally attractive to set up for another leg higher, but to definitely stay patient on this one for now, as it's going to be due for a large pullback next. So that is what I'm watching for in the broad stock market next, and the individual stocks that are leading and at the top of my watch list to continue to be leaders as long as they set up well next. Let me know your thoughts in the comments, whether you think the stock market has bottomed, if you think we're going to head lower after this rally, and what specific stocks are you watching to buy and trade next. So hope you all enjoyed and provided some value to you. If so, make sure to hit that like button and subscribe button. It helps me out a lot and I would greatly appreciate that. For anybody interested, you can join the private Discord chat in the description to get all my personal stock and crypto trade alerts. And thanks so much for watching, guys. Hope everybody made some money in these past couple weeks. I will catch you all next time. Peace out.